Hi there, it's time to look at Algorand through the Wyckoff lens and see where it is at and where it's heading. So, if you're new to my sessions, these are the three things that I will cover in this session. So let's start with the weekly chart of Algorand. As of this moment, you can see there are two sets of tags. One is the orange tags, meaning Algorand is within quite a big accumulation cycle. Okay, it started sometime in February, and after 9 months, we're still within the lower half or lower side of the accumulation. Not that we have seen the lowest, there's still a chance for it to get lower because that's what happened back in about autumn last year. Okay, so while it seems to be stabilizing at around the orange key level of 16 cents, that's why I'm keeping this 20% chance for it to come down to the red level of 10 cents. Okay, that's the downside risk we have to take if we're trying to get in right now. Okay, so the other scenario, the green one, considered the mid-July climb was the blind climax. Okay, and then we have the subsequent stages that happened over the past 3-4 months. And we may have seen the selling climax, right now. Okay, but it's still not confirmed yet. It's pretty much like the spring. There's still 20% chance for it to come lower. And if that happens, that essentially means the distribution, the green one, is over, and this upthrust won't happen. Okay, that's not something that I'm more inclined to, because I wouldn't say I prefer, it's more like I believe that's the orange scenario that is playing out. The reason I have the green scenario is that if we look at what happened back in the beginning of 2024, actually it started from December 2023, the price climbed to show the buying climax around 1 week before Christmas, and then dropped to the orange key level with the automatic reaction, popping up back to the upthrust above, or actually tested beyond the blue key level of 32 cents before it declined to another accumulation. So that's why this time, when the price came down from the buying climax set in December 2024, if what we have experienced during between sometime April to June was the accumulation for this cycle, this leg upward, it's a bit confusing in the sense that it's not as high as the peak back in December 2024, but it was higher than the upthrust, this distribution cycle over here. So that's why I'm sharing two ways to categorize it, depending on how eventually the next couple of weeks play out. Okay, we can consider this an entire accumulation, and this accumulation is having behavior that's actually outperform the distribution back in beginning of 2024. All right. However, if you don't want to categorize it that way, considering it as one single accumulation instead of you don't want to consider it as one accumulation. Let's put it this way. You want to consider it as two separate events, meaning there was a quick accumulation, okay, at the first half of 2025, and then it popped to the buying climax, and now is declining back to a new accumulation. All right, so that's why there is such a difference. But once it gets back to the accumulation, both ways of categorizing this aligns now, because they are still hoping to see some sign of strength, and eventually gets to the point where the next distribution cycle happens. All right. One thing, however, is that the bounce, if it is really from the selling climax, is called an automatic rally. That one over on the left is automatic reaction. That's the retracement from the buying climax. This automatic rally, for correspond to this one, may well be the sign of strength for the orange scenario. Alright, so this is high enough, the green key level is high enough, the 24 cents, because the automatic rally back in May this year was around that level. Okay, the high point went above, but the candles closes at that particular level. Alright, so the hope is the same, to see a bounce to the green or best or better at the light blue 29 cents. Okay, and eventually some sideways trading, maybe quick or slow, eventually gets to the next preliminary supply, just like what happened here, November 2024. That's the wish, because the macro environment, all the fundamentals aren't really supporting this. And this trend line is basically broken. I was tracking this selling climax, or like the second test trend line, but over the past 3 weeks, this 2 weeks ago, the first week of November, beginning of November 3rd, tried to stay on this line very hard. You see that week and the previous few weeks tried to close above this line. But last week, it has confirmed that this line is not providing the support anymore. So it's time to remove it. Now let's get to the daily and see what's going on. Here, we were basically discussing in the last session, or even the session before, that if this was the spring, on November 5th, we'll potentially see a sign of strength. And we were asking, was that the one? It's close enough to the yellow key level of 20 cents. Okay, I have to string it, so 20 cents, the yellow. But I want to see something stronger, passing the yellow, like the automatic rally. So I'll give this the tag, but duplicating another, hoping to see it come up even further. Okay, that's already a good sign after the spring. And we also said this 50% chance for it to come down for some other tests, and this has been confirmed as well. So rather than removing it, this trend seems to be continuing. Just one thing, if it is really coming to show a sign of strength, the difference between the test and that one is that the trend will change if the next sign of strength comes up. Because currently the price is still within this downtrend. You see this blue box, right? If it continues within the box, there's no way it can create the sign of strength. So when that happens, it means the trend is finished. Even if it's trading sideways, it's still better than it going downwards since late July. So some people may not have told you this. This downtrend actually started back in mid-July. We have been here for 4 months already. Even though a lot of times it seems like it's only a few percent up and down, this leg is 4 months long. And currently it seems like it's finding a little bit of support. You see it's stopping at this level. That's the level from the last spring back in April. So if I draw a line here, you can treat this as an intermediate support. Not that it's very strong, but it's still showing its effect over here for both occasions on November 4th and 5th, and also yesterday and today. Alright, if this line continues to provide solid support, we're seeing two triangles here. One formed by this dashed line and the ceiling of the downtrend that's pointing towards mid-December. If it's got sufficient strength to climb above the orange key level of 16 cents and trade within this upper triangle, there is a chance for it to break out earlier, before December 4th or 5th. Okay, it doesn't have to wait till the price or the candles to travel all the way to the tip to break out. This is just showing us, given the downtrend, the channel, is crossing those key levels or intermediate levels, it seems to find support right now. So those two can be key moments where the price eventually break outside of this 4 months downtrend. Okay, I hope that's going to happen. If it doesn't, and it continues to trade downwards towards the 10-cent level, it's not too far back in history. It was actually summer, all the way into beginning of November last year, that Algorand was trading within this zone. So being optimistic is important, but as long as this hasn't gone outside of the downtrend channel, the trend or the possibility of it going deeper still exists. Okay, so that's why I'm keeping this 50% of further test. It can be sideways or it can follow the downtrend to go south. Alright, so that's for Algorand for today, and thanks for joining me. See you in future sessions.